All right, back to, this is tape number 2, because I don't want first one to be too long. Now, Goldman led the whole bull rally, and Goldman has led the bear rally, but Goldman went into its bear trend, the SMF bear trend qualifier, using the weekly charts and all of the other things. And let me tell you something, I'm not going to go in intrinsically, but we are about to go into a weekly sell signal. When that weekly sell signal hits, that means that it might take the broader market to catch up to it, just as it did over here when it went into its Goldman Sachs started its bear trend on what day, what week? Oh, right there, 10/25. 1, 2, 3, 4 weeks below it, sorry. And on 11/15, it got worse, and it consolidated, and it had 2 weeks up. But you made a lower low, ha ha ha. And the reason why is that you could trade the upside, but you would go long for a very short period of time. This was 10 trading days with the distribution bar. But once you do go long, you got to be an aggressive short seller again, because the bear trend ain't left. And it's still here for Goldman. And this is how to establish the early stages of the best of the breed out here. And we use Goldman for that reason, because Goldman is what took the March lows up where we bought it over here all the way to the bear top reversal. That there, you couldn't call that reversal a bear trend right here, because there's no evidence yet. Not until you get 4 weeks below it, that's the real confirmation. But you could see where the distribution was, and once it broke below the 10-week and it couldn't close back above that blue line, you knew damn well that the best was in trouble. And the broader market has followed Goldman Sachs. And so has other equities. So here, let me show you what the problem is here. The 10-week moving average has been declining. When the 10-week declines, any up move is a short sell. No matter what. You don't even have to think about that. Bam, short, because the trend will fail, and it did. And the thing about it is, any up move is going to be resistance. And the SMF school will teach you how to use the SMF weekly bar. That's half of the move right here. That's the SMF Pro Trader bar. Basically, until you close above 160.65 for 4 weeks in a row, that resistance and this bear trend is still in play. You had people buy it here. You had people buy it here. It failed. You had people buy it here. It failed. Why did every buying and tip in Goldman Sachs fail? Because of the bear trend that it was in. Look at these 2-week pops. 10 trading days is 2 weeks. But they failed, and you made lower low in the trend because it's in a bear trend. You pop up, but you go lower. Same thing on the indexes. The indexes that I showed earlier on, and today is Saturday, by the way, the indexes will follow the same movement. Doesn't matter. We put a bottom in on Friday, attempted bottom, that is, and we'll go up, but that trend won't be sustainable. Here is a big problem on Goldman, and it's fighting for support down here, but it's in a bear trend. Any up move doesn't matter. We would be a short seller in any up move. It's in a bear trend. How to short bear trends? So the public gets in here feeling all good. Oh boy, man, we're going to the moon. Oh, and then all of a sudden, guess what? You come down, and then the public down in here is saying, oh yeah, we got support. I don't need to come out of the trade. Then they, the minute that the public sees it go up a little bit, oh boy, man, we're in a new bull trend. How about that? No, you're not. Still in the bear trend, and you went lower in it. That's the reality of it. And the reality of it is how to make money using bear and bull trends, understanding the broader market, understanding the stages of a bear trend. We're in stage number 2 right now. Stage 1, we rolled over on the 10-week. We closed below 4 weeks, and we could not get back above it. We had a 1-week attempt. That doesn't cut it. You would have had to have closed 4 weeks or consolidate 4 weeks above that 10-week, and that 10-week moving average cannot descend. One thing that we teach people in this school is the power of moving averages, whether they're daily, weekly, monthly, or yearly, is that there's a mathematical range between these, and the 20-week is rolled over. So this is an extreme secondary phase of a bear trend on Goldman Sachs. Now, any up move, we will buy put options and make a lot of money. We can go long off the bottom, but we're going to be a very quick seller because we already know that the bear trend hasn't left. Whatever goes on in people's deranged thinking, well, hey, that's on them. The trend is what it is, not your personality or your belief. Okay? Because a bear trend doesn't care what you think, because it's going to continue its course. And you can make a lot of money shorting these 3-week reversals. Buying put options. 170 put would have paid you a lot of money. Dropped $20. That's another thing that we teach you how to do. Leveraging the options market to make anywhere from 100 to 3,000% gains. Using bear and bull trends, applying that to your options trading. All right, people, that's all I got to say here. If you want to learn more about it, take our free 5-day trial. Right now, I'm training our students on Saturday, February 6th. They understand what's happening. I'm going to cover the broader market with them now. And we're going to be buying stocks next week off the low, but they're going to be anywhere from 1 to 3 day trades because they're still in bear trends. But you can trade those trends and make a profit and get out and go short and make even a bigger profit. The bear trend, Goldman let it down. I'm sorry, I'm going to give you one last one. Goldman led the markets higher off the lows last year. And it was the first one to give a warning because the market followed Goldman Sachs trend. And now the market, as you know, by the amount of selling, is it took about, about 40 days for the broader market to catch up to the bear reversal on Goldman. And it did. Just like I said it would back in October of 09, November of 09, and December of 09. I want you to profit. Come to our school. Get involved. This is a weekly MACD. When you get a weekly buy signal on this moving average convergence divergence, boy, you go ripping higher. But let me tell you something, folks. When you get, like it did last year, when that weekly sell signal got triggered, Goldman stayed in a weekly sell signal for, I don't know how many weeks. Many weeks. I quit counting them. And let me tell you, it's been in a weekly buy signal with that strong uptrend, but we're about to go into a weekly sell signal. You've been given a gift. You want to find out more, visit us at stockmarketfunding.com. Sign up for your free e-video book. Hey, if the tape helped you, spread it on stock tweets, Twitter, I don't care. Spread it on YouTube. Help somebody. If it's helped you, then you help someone else. And you pass that on to people and you tell them to come here. Because we'll help you make a lot of money in our daily live trading room.